before you go ahead early on, see that bankruptcy attorney. and everybody, they seem to wait till after, and then it's maybe too late to get some of the help that we're talking about.
I think if someone finds themselves in a position where either their residence or investment real estate are well underwater, where the debt far exceeds the income, the debt far exceeds the value of the real estate,
Yeah.
it would be wise to consult a professional.
Okay. How are obligations for real estate different from other debt when we're talking about this bankruptcy stuff?
Well, in real estate's a big part of
Yeah,
that stuff.
yeah.
There was one of the more interesting crossovers right now of bankruptcy and real estate has to do with a situation in which, again, the value of the property is far less than what's owed on the property. Very often this is manifested in which you'll see a piece of property in which perhaps there are multiple deeds of trust on the property.
Right.
And let's say the property is worth $600,000. Maybe there's a first deed of trust for $600,000, but you might also have a junior deed of trust, a second for $200,000, and even a third behind that for maybe another $100,000. If an individual files Chapter 7, the real estate goes into the bankruptcy and back out of the bankruptcy with the loans intact. If you have a first and a second and a third, then if you're going to keep that real estate on the other side of bankruptcy, you'll still have a first and a second and a third if you file Chapter 7. Mm-hmm. But one of the interesting differences between Chapter 13 and Chapter 7 is that in Chapter 13, if there is a junior deed of trust that is wholly unsecured, in other words, there is no equity at all in the real estate to cover that deed of trust, then in a Chapter 13 bankruptcy, you may be able to remove that deed of trust. We call that lien stripping. It is also possible to lien strip in Chapter 11, although again that's a far more expensive proceeding. But many individuals are seeing if they can qualify for Chapter 13 as an opportunity to rid themselves of junior deeds of trust in the right circumstances.
So that's actually a pretty big deal, because there's an awful lot of people that I've talked to, well, and it seemed like, especially standard procedure, almost like a first home or whatever, that they would have these, whatever they call them, like 80-20 loan arrangements. So the bulk of it, of course, would be in a first deed of trust, but then they would have some sort of an equity line or something else on top that made, what would otherwise be the down payment for the property.
Well, if the first and second in that example are used for the purchase of the property, then once again, you may very well have a situation where there is no equity to cover that second.
Yeah.
And even though in that situation a purchase money second would not have recourse against the borrower, nonetheless, in order to get the debt to resemble the value, stripping that second may be of tremendous benefit. Mm-hmm. There was a great deal of talk about utilizing the bankruptcy code to reduce debt on homes to the value of the home. Mm-hmm. There was this notion of cram down. That never made it through Congress. The banking industry is just far too strong. Mm-hmm. But this lien stripping is a very, very strong tool that we do have now in bankruptcy.
Okay. Do you have a choice whether to keep real estate when you file for bankruptcy?
Yes. In a situation in which is very common, where an individual may have real estate with no equity in it. I have many individuals with numerous pieces of real estate with no equity. The individual in that case can determine whether they want to retain the real estate, even though it has no equity, or to let go of it. Basically, the bankruptcy court is only interested in real estate if it has equity in it. So this would not apply if an individual had investment property with a great deal of equity. Mm-hmm. The bankruptcy court would be interested in selling that real estate to realize the equity to pay creditors. Uh-huh. But these days, it seems to be a rare occurrence that I see real estate with equity.
Okay. Something to do with the clientele that's showing up, I guess. Okay. What's happening with loan modifications? There's a lot of buzz about this. But as a bankruptcy attorney that's seeing people that are trying to process these, what are you seeing out there?
Loan modifications are an absolute nightmare. And frankly, I think they're a disgrace. They're a disgrace in the state, they're a disgrace nationally. And I say they're a disgrace because the spirit of loan modification, I thought, was after seeing the great banks of this country bailed out, that it was time for the banks to help individuals.
Give back a little bit.
And that's simply not happening. And I frankly wonder how sincere the banks are in really wanting to do loan modifications as opposed to just proceeding with foreclosure. It's a very tough situation that I think requires governmental intervention.
So, in a nutshell, for the most part, it's just not happening.
Well, there are a lot of folks rolling big boulders uphill. I have heard of modifications happening. Unfortunately, I think if you look statistically at the number of loan modification attempts versus those that actually occur, it's a dismal minority. The one exception to that is that there is the government HAMP program, to the Make Houses Affordable program. The problem that we have in California is that the federal HAMP program does not apply if the loan, a subject loan, is over $726,000. In many parts of this country, probably a loan over $726,000 is unheard of. But in Silicon Valley, it's actually extremely typical.
Yes.
So many of my clients do not qualify for the federal assistance, and they're just left hanging on their own at the mercy of the banks.
Okay. So we have a minute or so, maybe a minute and a half. How about a Dutch uncle summary or thoughts related to somebody coming to you to talk about bankruptcy?
Well, the most important thought is you are not alone. And I urge anyone in this situation who is losing sleep and feeling enormous stress over debt to understand that, as I said before, it's not the lowest level of our society who's having to look for relief. It's the highest quality, the most stand-up people you could want to meet who are needing relief. And I urge people to be humble, go seek some advice, and you may be surprised that there may in fact be a solution out there for you that is far less dire, far less painful than what you may anticipate. Because as we all know, very often our anticipation is far worse than the reality that we deal with.
That's great. Thanks so much, Mike. Thank you for being my guest today.
My pleasure, Mike.
And sharing some of your vast knowledge on this subject with us. So folks, there are a lot of people that are hurting out there, and so we hope that you've gotten some value from this interview today, and maybe some hope, and that you will seek that legal advice. And I hope you can join us next time on Financial Insider Weekly.